fold in your guesstimates of the inflation view of America with your stunning call that we will see non-farm payrolls plunge here, that the labor market will crack.
Well, the labor market will eventually crack. I have to say that the momentum that we saw in the second quarter in GDP has put that out a little bit. I mean, I think it's more likely to be, very late in the year, early next year when we see a decline in payrolls. But I think the much more important point is we're seeing disinflation everywhere. We're really seeing deceleration and disinflation in the U.S. economy. The numbers of today, I think we'll get about 0.2% on the overall CPI, about a 3.2% year over year, looking at this in a seasonally adjusted basis, which I think is the right way to look at this. But the key thing is thereafter, I know the base effects go away, but I don't really see inflation picking up from 3%. I think it stays at about 3% on headline CPI through December, and then begins to fall all the way through 2024 down to 2% by the end of the year, as that mismeasured housing issue begins to flip the other way. So overall, I see plenty of signs that inflation is just fading away here. And the frustration here is seeing the Federal Reserve still tighten to fight a battle they've already won.
How rapidly will they turn? I mean, I've been very, I think, fair to them, David. It's an institutional effort. They're allowed to be late. But when they, quote unquote, turn on a dime, how rapidly does that affect our world?
Well, I think the really interesting part here is at some stage we will get that negative payroll read. At some stage there'll be a real fear of actual recession here. At that point, the Federal Reserve stops its quantitative tightening and cuts rates. But the problem is the first rate cut they do is going to make the situation worse. Monetary policy is at its most restrictive and oppressive when rates are high and you start to cut them, because then everybody's waiting for the low rate. I mean, nobody's going to take out a mortgage when the Fed cuts 25 basis points because those rates are going lower and people are going to be scared that the Fed is scared that we're headed for a recession. So what I think the Federal Reserve is miscalculating here is the idea that they're going to be able to gradually bring down rates from a too high level in 24 and 25. I think that when they start cutting, they're going to have to cut pretty aggressively here.